Fraser Valley market shows early bloom with February sales lift, but I'm not ready to break out the bubbly just yet. Jordan here with your Fraser Valley market update for March of 2026. The Fraser Valley market showed the first hint of spring activity in February, with sales increasing from January, but the overall picture still remains subdued compared with typical seasonal levels. The Fraser Valley Real Estate Board recorded 843 sales in February, and that's a 36% increase from January, which is good, but still 38% below the 10-year seasonal average. Not so good. So while activity improved from the slowest month of the year, it remains well below what we would normally expect heading into spring. New listings actually declined slightly in February, falling 9% to 2,796. Some sellers appear to be waiting for the traditional spring surge before bringing their homes to the market. Active inventory remains elevated though. Active listings rose to 8,344 units, up 8% from January and sitting 51% above the 10-year seasonal average. With supply still outpacing demand, the sales to active listing ratio sits at 10%. A balanced market is generally considered to be between 12 and 20%, which means the Fraser Valley remains firmly in buyer's market territory. Prices continued to edge lower in February. The composite benchmark price declined 0.2% to $895,100, keeping the downward trend intact after a year of steady softening. Looking at HPI by property type individually, we see single-family detached now sits at $1,370,900, down 0.2% from January and down 8.6% compared to February of last year. The average days on market for active detached listings increased to 42 days, up from 39 in January, suggesting inventory is continuing to age, even as some properties are still finding buyers. Townhomes declined slightly to 770,700, down 0.3% month over month and 7.1% year over year. The average days on market rose to 34 days, compared with 32 days in January, again reflecting a market where listings are taking longer to clear overall. And lastly, apartments were effectively flat at 488,300, down 0.1% from January and down 8.9% compared to last year. The average days on market for active condo listings increased to 36 days, up from 33 in January. Now, this is a significant improvement from the 1% monthly drop seen only a few months ago, but the declines remain gradual and they continue to accumulate. Time to sell did improve slightly compared to January. In February, the average days to sell were 42 days for detached, 34 days for townhomes, and 36 days for condos. But median days to sell were noticeably faster. Detached homes had a median days of 17, townhomes were 19, and condos were 19 days to sell as well. That difference between average and median continues to highlight the split market we've been seeing for months. Well-priced homes are still selling fairly quickly, while anything that misses the mark tends to sit and just accumulate days. When you juxtapose this with the increasing average days on market, it's further proof that the pricing and positioning are more important than ever, and fast sales are entirely possible for the right price and product. Sales to list price ratios remained relatively stable. Detached homes averaged around 96.5% of list price, townhomes came in around 97.6%, and condos averaged roughly 97.2%. So buyers are negotiating firmly, but the numbers are still showing that sellers who price realistically are able to secure deals without dramatic discounts. Locally, February felt very similar to January in many ways. There are more people out looking, showings have increased, and activity has picked up slightly, but it hasn't translated into a large jump in completed sales yet. Many buyers still appear to be waiting for something to trigger a decision. Subject to sale offers remain common, and aggressive negotiation continues to be the norm. Buyers are taking their time and evaluating every option available before committing, which makes sense. At the same time, the conversation around interest rates does seem to be stabilizing. Earlier in the cycle, many buyers were sitting on the sidelines waiting for rates to drop, but now most people seem to have come to terms with where rates are at today. Lower rates would certainly help, but the reality is that the decision to buy now is usually driven by a combination of rates and falling prices rather than one single factor. One area that did stand out in February was the condo market. Condos saw the largest increase in sales, which may signal that first-time buyers are beginning to re-enter the market. If that trend continues, it can help free up movement across the rest of the market as owners start to move up that property ladder. That said, it's still early. Sales improving from the slowest month of the year doesn't necessarily mean momentum has fully returned, especially when activity remains well below the historical averages. The broader economic picture does continue to explain much of this hesitation though. Canada's economy has effectively stalled in recent months. Monthly GDP readings through the end of 2025 showed little growth, and per capita GDP has been declining. That matters because it means that even when the economy is technically growing, the average Canadian is becoming poorer. And that disconnect shows up directly in housing behavior. Buyers are more cautious, they negotiate harder, and they are less willing to stretch financially. The Bank of Canada has also reinforced this uncertainty. The bank has now held its policy rate at 2.25% for the second consecutive decision. Governor Macklin has pointed to slowing economic growth, global uncertainty, and the need to confirm that inflation remains sustainably under control before making further moves. So for borrowers, that means rate relief is not guaranteed in the near term. Fixed mortgage rates are also being held up by bond markets. The 5-year Government of Canada bond yield currently sits at around 2.89%. While that's slightly lower than the roughly 3% level we saw late last year, it remains elevated enough that fixed mortgage rates are unlikely to fall meaningfully without further declines in bond yields. The labor market is also sending some mixed signals. While unemployment remains relatively modest overall, job growth has been uneven, and youth unemployment remains elevated. Job gains in several recent reports have leaned toward part-time work, while full-time opportunities have been slower to recover. That combination affects confidence, especially for younger households trying to enter the market for the first time. Another development that could have long-term implications for the housing market is the recent Musqueam decision in British Columbia. The framework established through this decision significantly expands jurisdiction and authority for the Musqueam Nation over a large amount of land and economic activity in the region. While it does not transfer fee simple ownership in the traditional sense, it does establish a governance structure that effectively introduces another layer of authority alongside federal and provincial governments. So in practical terms, it creates a new governing framework tied to ancestry and membership rather than residency or democratic representation within the broader provincial system. Regardless of where people fall politically on reconciliation, decisions like this raise real questions about property rights, legal certainty, and investor confidence. British Columbia's real estate system has historically been built on clear fee simple ownership and predictable legal frameworks. If those foundations begin to shift or become less certain, it could influence how both domestic and international investors view the stability of property ownership here in the province. So for now, the Fraser Valley market continues to adjust. Sales are slowly improving from winter lows, but activity remains well below normal levels. Inventory is still elevated, prices continue to edge downwards, and buyers remain cautious. That doesn't necessarily point to a collapse, but it does suggest that the path back to a balanced market will take some time. So for buyers, this remains a market with options and negotiating power. For sellers, pricing correctly and understanding the competition is more important than it's been in years. And as always, if you want a deeper breakdown of what's happening in your specific neighborhood or property type, check out the market area page at jkre.ca or reach out directly. I'm always happy to help you make sense of the numbers. Thanks so much.